All right, guys, so training session, the subject that we're going to be covering this morning is lines and lines. Uh, as you know, I trade a lot with lines, and what I wanted to do this morning is to cover some of the different types of lines. It's a relatively straightforward subject, I think, once it's been explained, but the basic premise is that not all lines are the same, and we want to understand how price moves around lines. And first of all, if we can understand the different types of lines that we would draw and the points that we would draw them between, then we can differentiate between the type of reactions that we would be expecting at those points. So we're going to start off and take the usual format. What we will do is work our way through the theory first, and once we've finished making our way through the theory, we'll take a look at a few charts and apply some of that theory and see the kind of conclusions that we can arrive at. Like I said, it's a relatively straightforward subject, but I think it should still be an eye-opener once we realize the differentiation between the different types of charting that we can do using lines to connect various price points on a chart. So if we take, to begin with, our standard line, and our standard line is the trend line. So what happens is that you have, by way of example, price moving and here we're looking at the down move. And what we would usually do is we would connect the highs of that price structure, and consequently what we have is what we call a trend line. Right now, the purpose of a trend line is very simple. The purpose of a trend line is to define a trend, and what that trend line will do is that it will give us the earliest indication that the wave direction is about to change. So if we saw the price working its way back up towards that trend line, we would be in the first instance, because it's a trend line, what we will do is that we will assume that the trend line is going to hold the price, and that the price is not going to breach the trend line. That's going to be our assumption. This isn't an assumption which you can trade straight away, right? What you need to do is to wait for some kind of confirmation. But the purpose of making that assumption is that over the long term, it will keep us out of a lot of trouble. Okay. What it will stop us doing is from assuming that the trend line is going to break. So you see a price approaching a trend line and you think, it's going to break, and let me take my entry now, and only to find that actually the trend line held. So there's a reason why we're making that assumption, and the reason for making that assumption very simply is that it keeps us out of a heck of a lot of trouble making that assumption. So the price comes and it returns to the trend line, and if the trend line is going to hold, ordinarily what you would see is some consolidation taking place under that line. And once you see that consolidation for any length of period, then this gives you more and more confidence that the line is holding, and eventually what you will do is you will initiate that. In this example, you would initiate that short trade, and you would look for a continued move toward the downside. Now, if we get a trend line break, what we're looking for is a significant break. So we'd want to see 30, 40, sometimes even 50 pips move above that level. And one of the things that we would do is that we would mark the breakout point, or certainly we would eye that up. That price at which the price breaks the trend line tends to be quite a significant price. And our standard kind of play when we see the trend line break is once the price returns to the trend line, that trend line had acted as resistance all the way as the price was falling, and now that the price is on the other side of it, when it pulls back to that trend line, we'd be looking for it to act as support, and we would be looking for a bounce off of that, and if it's going to be more significant, sometimes you'll see a break. You'll see a break above the last high. But what this type of entry does do is that gives you an opportunity to take a very reasonable kind of entry, right? And maybe reasonable is not the best word, but it's a very good risk-defined entry, and it has very, very clear parameters. So as long as the line is above the trend line, you'd say, well, we're close enough to the trend line now, we can take an entry. We've got good defined risk, and the net bias, because that line has broken, has now become to the north side, and we will start looking for the long opportunities anytime the price comes near that line. You will, of course, sometimes see that the price returns to this line and looks to bounce off of it a few times, and again, every time it hits that line, as long as the line is holding as support, it's giving us very good risk-defined entries, and it's about taking entries at a price point where the price doesn't have much of a choice. You know, she either needs to break north from there or she needs to break south from there, and ordinarily the trend line will do that. Some of our best setups and the ones where we tend to earn the most pips tend to be once you've had that trend line break and the price comes and retests it once, twice, and it comes and tests it a third time, then you know on that third test it tends to be quite significant, and you will always get a very decent and reasonable break off of that trend line. So this is something, if you look at the past videos, and particularly if you're looking at the last trades, we've played it over and over again, where we've had the third retest on the underside of a broken trend line, and that gave us an opportunity to take some very, very significant trades and to pull some good pips out of the market. So this is the first type of line that we look at. It's a trend line, and usually you'll hear, I'm saying usually, more often than not, you'll hear me referring it to it for what it is. It's a trend line, and the easiest play off of a trend line is a trend line break, because you wait for the retest, and that gives you your risk-defined entry. But otherwise, you assume that the trend line will hold, and as long as you're getting that consolidation below the trend line, then you can be quite confident that actually the trend line is going to hold, and so you would wait for that and then take your entry, right? So the trend line hold is a conditional entry. You're waiting for a particular condition, you're waiting for the price action to confirm that the line is actually holding, and then you're looking for trend resumption. Whereas with a trend line break, you can have a more aggressive entry, and you can just wait for the retest and then play the retest. You do sometimes get some nuances with trend lines, and we saw some of those, we've seen some of those this morning, and so you can have something which is which gives you a situation which we describe in technical terminology as an overthrow. So you've had this price below the trend line, it comes, it acts as resistance, breaks down, and the price breaks through the trend line, and it pulls back, and it actually ends up pulling back under that trend line. And so if you see that happen, usually it's a fairly strong signal that you're going to get a continuation, and that trend line is going to come back into play. So you'd wait for the price to return to that trend line, and then you can be quite aggressive with this, and you'd expect that it acted as resistance before. You had your overthrow situation, and now that we're back under that trend line, the shorts are back in place. She pulls back, and it's going to be acting as resistance again. And in this instance, when you have an overthrow, you can be quite aggressive with that. She returns to the trend line, you go short, and in this instance, you would be risking the high that was achieved from the overthrow, right? Although you can be a bit sharper with that, and again, you know, if you took that entry at the line and you see her breaking above it again, and you're getting an hourly close above that level, you can be looking to close out that trade even before she reaches that high. But overthrows, traditionally, they give very, very good, or from experience, they give very, very good technical entries, good risk-defined entries, and they tend to be very, very easy to trade. The price will pretty much go your way from the moment that you take entry. And as traders, that gives us a lot of confidence in our trades, and it lets us ride those trades to their logical conclusion. So that's the kind of basic theory behind a trend line. You've got trend line holding, you've got a trend line break, and the other situation that you can have taking place around that trend line or in fact around any kind of line, is that you can have this overthrow situation take place. And again, these overthrows, they tend to give you very good risk-defined entries. And ultimately, that's what trading is all about. It's getting a good risk-defined entry and maximizing your gain against the kind of risk that you were prepared to take. And that's all that we're trying to do. That's all that we're trying to do in our trading, right? So that's the first part of the theory, and that's covering trend lines. A lot of this material we've covered already, so most of this should be quite familiar to you. And if we just give this a second to upload, I will post that screen capture to you. Okay, so here we go. That's the first screen capture. All right, so what other kind of line do we have? All right, so again, considering the price action. So what happens is that the price is breaking higher, and it continues to break higher, and then you get a reversal. And then you get a reversal of sorts, so you get some kind of continuation trade like this. And when you see this kind of price structure, what I usually do is that I like to draw some lines between points which represent resistance and support. And what I've found in my experience is that if you're connecting a line between a support and resistance, that line tends to be quite significant in terms of when it tends to be quite significant when the price returns to that level. And in fact, sometimes that line can even be used as a target, but that's maybe in a more advanced play, and we'll look at that in the course of things much further down the road. So we draw a line between a marked resistance and a marked support. This isn't a trend line. This is a support and resistance line. Sometimes I refer to this line as a wall. And so we've created a trend wall here, or we've created a support wall, or you'll hear me call it a resistance wall. But overall, the kind of terminology I use for it is a wall, right? That's what we've got. So we mark the point between a given resistance and a given support in a particular wave, right? So in this instance, we have the wave going north, and what we've done is we've marked the resistance and the support. We've created a wall, and when the price is returning to that wall, what we'll usually notice is that that area will give quite significant support, and every time the price returns to that area, it's going to give quite significant support. And so it'll be very, very good to play the bounces off of, and we use that in order to determine a bias for a trade at that particular point. So you may have seen that move north, and we had the trend line, and the trend line's been broken, right? So the trend line break gives us technical south bias, but when she reaches a support wall, we will be looking for the long trades off of that support wall, looking for it to give support, right? So it's not a trend line, it's a support wall, and because it's a support wall, we can trade the level quite aggressively when the price reaches that particular level, right? So so that's how we're going to trade it. Okay, guys, you just need to give me a couple of seconds. I need 30 seconds from you guys, and then we'll come back to this picture. Just a few seconds, guys. All right, guys, sorry. Apologies for that interruption. Okay, so that's a support wall. We'll see this same instance taking place with price heading in the other direction. So you can create support walls, you can create resistance walls. If you see that the price is broken below a support wall, you can expect that the support wall will turn to resistance, and that the price will carry on down. Ordinarily, I'm a lot keener on playing those first bounces on a support wall, right? So the first 2 or 3 bounces on a support wall, they tend to be quite easy trades to take, because it's an area that you can identify well in advance of actually the price reaching there, right? So, and we're going to look on charts, and I'm going to show you the kind of structure that I'm looking for, and then you'll understand why I'm so keen on drawing these types of lines. But these support walls, they tend to make very good trades, particularly on the first strike. So when the price is first coming back to that wall, that's when you want to be interested. And if the first strike holds, then the second strike is likely to hold, and the third strike is likely to hold as well. After the third strike, you want to exercise a little bit of caution, because the more times that the price goes and strikes that line, the more of those buy orders have been soaked up, and eventually there won't be very many buy orders left, and she will end up breaking through to the other side. When she breaks through to the other side, you have an opportunity for taking a short. You can stop and reverse your longs if you're still holding longs. But playing the long off of that support wall is my preferred choice. I don't often play the other side, and the reason for that is because sometimes you get overthrows off of these kind of walls as well. Although, if she breaks through, she could continue to the long side to the downside a long way. But if you if you do end up with an overthrow situation, it's not very nice to find yourself trapped like that. And usually, I'm just looking for the kind of certain thing. I'm looking for the trade which is going to give me pips every single time, rather than looking for the thing which may be hit and miss, right? So if she breaks under, she pulls back. More often than not, you'll find that she gives resistance, but you will get those scenarios where she's not giving resistance and she's giving you an overthrow, in which case you're trapped and you need to be exiting those shorts and playing the longs again. And when you're having to do a stop and reverse kind of situation, I'm not against stop and reverse. I do like stop and reverse a lot, but you want to try and limit yourself to those situations where you only have to attempt it once. You don't have to attempt it twice, right? And on these walls, sometimes the wall can become insignificant, and you might end up seeing that wave structure crisscrossing through a wall, and that can mess up your whole day, right? So the best trade to look for, the first retest, then the second retest. You can attempt a third retest. You've already made pips off of the first and second. Usually you're going to get very significant bounces off them. And once she's broken through, it's a question of choices, and it's a question of how you want to play it, and whether whether you're seeing kind of opportunity in that move. There is the potential there, but you just have to be a little bit aware of that overthrow situation, and for that reason, I tend to be I tend to be a lot more cautious when playing these walls once the price has broken through. Yeah, I'd rather look for proof that she's going to hold as resistance first if I'm going to do it, and then I will play it, but I won't take her. I won't take her as aggressively, right? So this is a support resistance wall, and you see a lot of these. Coming up on my charts. They tend to be very reliable plays. And they are deadly, in fact, and you will make pips off of it every single time if you're marking those levels. Certainly, it does make a good inflection point for the price, and quite often you'll get some very significant swings off of them. Okay, so turning towards the charts, if we want to take a look at some charts now, and maybe look at some of the application of this. I'm going to start off actually with the chart of Euro USD, and I think the trend lines everyone's very familiar with. What I want to do is I want to focus a little bit more on support resistance walls and the kind of relationships that develop when you're drawing support and resistance walls. There is a little bit of an art to this, and but I think what tends to happen, and I think some of you guys who have been around a while recognize this, that once you get just a little bit of an eye for it, you know exactly where to draw those lines, right? And you're able to pick it up. You just need your chart. You need to zoom out, and once you've zoomed out, you can see those kind of support resistance points that you ought to be drawing your lines between. I want to look at the Euro USD, and after looking at Euro USD, I want to look at the Kiwi, and I want to highlight a particular structure to you guys which appeared on Euro USD. And the structure that we're looking at, we're going all the way back to 2010, 2011. We're looking at the bull wave that we had, which took price from around the 28 area up to that 49 area. And we're going to look at the structure inside of that bull wave. So I'm here on the daily chart, and maybe when I draw the lines I might drop down a time frame or something to maybe show you some of the significance, but here goes. So we had the price pull up, hooked, found support, broke higher, hooked, found support, broke higher, hooked, found support, hooked and found support, hooked and found support, and then she broke higher before eventually she started breaking down, right? Now the point is that having recognized this bull wave structure, or having seen that bull wave structure, is there anything that we could have done so that we would know the inflection points when the price starts making its way back down, right? Is there anything that we could have done? Could we have known that the price was going to turn from these levels where the price turned? Could we have known that she was going to turn from there? Indeed, could we have known that we would have got a strong and significant rally from this level here down at 28? I mean, you know, she gave a bounce from there, which was to the tune of about 600 pips. A lot of buyers got involved in that level, and you have to wonder what motivated them, considering all the tragedies that were taking place in Greece and pretty much across Europe, and they really haven't finished yet. I think it's probably only just the beginning, right? So what was it that led to that 600 pip rally? What was it that led to almost an 800 pip rally from this level here? And again, is that something that you could have known, that you could have known about, and is that something that you could have taken advantage of at a very early stage, right? And my answer to all of these questions is yes, you could have known. Okay, hang on a second. We've got a message from Will, lost sound. Everyone else has got sound? Yeah? Okay, Will, it may just be your connection, mate. It may just be your connection. Maybe leave the room and come back in. All right, if someone can maybe just type that advice to Will. I've just realized he can't hear me, right? So, okay, so could we have known that, so could we have known that we're going to get inflection points there, right? And my answer is that having considered the wave structure north in this bull wave, we could have identified every single turning point that we had in that down wave. Every single turning point, we could have identified it, and not only could we have identified it, but actually we did identify them, right? And we took a lot of trades on the euro last year, and pretty much every single trade was a huge winner for us. We took a lot of swings off of that, and literally made hundreds and hundreds of pips on practically every single turn. So I'm going to show you the technique that was used I'm going to show you the technique that was used in order to do that, and then I'm going to get quite excited because I'm going to show you a very similar structure which is setting up on another chart, and we're going to be wondering, is exactly the same thing going to happen? Is exactly the same thing going to happen in that instance, right? Now, okay, well, I think what you're going to have to do is maybe just watch the recording, right? Because everyone else has got sound, so it's a technical issue on your side. All right, so how is it that we identified? How is it that we identified those levels? What we did very simply is that we took the hooking wave structure that we're seeing on the euro here, and what we did was that we drew support resistance lines between those levels. So in the first instance, what I would do is that I would take that as the resistance, and I would take that as the support. You can quite clearly see here the kind of hooking structure that we had and why the wall has been established between those two levels. All right, so we've established a wall between that level. Okay, and the next area where I would be drawing a line is here between a resistance there and support there, and again, so that's the second line which I'm drawing. And again, if you're looking at the price structure, you can see we found resistance, fell back, broke through the level, pulled back, found support, and broke higher. All right, so we've got resistance, we've got support, and we've drawn a wall through that level. And again, there's going to be another level which we're seeing here. So it's resistance and it's support. So you can see that there, I'm a little bit off there on the line, but that's okay. Let's just mark it down to that level, and maybe we can do two lines here. All right, so we're going somewhere between exact science and art here. All right, so we're doing two lines here. In fact, maybe three. Okay. On a daily time frame here, if you did this on a 4-hour and hourly, sometimes when I'm drawing these lines, I'll drop down and I'll even go to a 5-minute chart just to tune it in, because with MetaTrader we do have this problem where the lines move around a little bit after you've drawn them, right? But I've marked some lines here, and ordinarily what we would do is that, if the price is coming, they would look for the line to be respected. If it's not being respected, we'll delete it. But you can see again why I've marked the line. So here's our wave structure. The price went up, we had resistance, the price fell back, broke higher, pulled back, found support, and there's our resistance and there's our support. And what we've done is we've drawn a few lines trying to fine-tune those levels between the resistance and the support. We've drawn our wall right now, and I'm just going to move forward a little bit, and then maybe you'll start understanding the significance of the levels that we're looking at, right? So the first line that we drew was the first wall that we drew was here at that level. And if we look at the price structure, we based it on this hooking structure here. We had resistance, we had support, we drew the wall coming through it. And the second line that we drew was here, and that was based on this structure here, right? And if we look at the price, what happened when it returned to these levels, it pulled back to the wall, gave a very significant bounce, pulled back to the wall, went through to the next wall, gave a very significant bounce, pulled back to the wall, gave a very significant bounce, pulled back to the wall, she breached it. When she pulled back, support became resistance at that wall, right? And she went on further down. And then if we're looking at the more kind of significant levels, when she reached the lower walls which we had drawn, right? So these are the lower walls which we had drawn. And if we're looking at the price behavior around these walls, we can see how we had the most significant inflections at these points, right? So at the lower walls, we were talking about a rally which went to the tune of what is 1200 pips almost, right? So so from around the 30 area to the 42 area, that's almost 1200 pips. That's a very, very significant rally, right? But the inflection happened from a wall, right? And not only did it happen from the wall, right? But if you look, and this is one of the things which I find really amazing about this stuff, right? Is that not only did it happen from the wall, but it happened to the pip, right? So, you know, you could have caught that trade, right? And rode it for the best part of, you know, it went 1200 pips. You'd have probably ridden that for at least 600 or 700, right? And you could have caught that from the pip, right? You didn't have to allow 100 pip stop loss or 150 pip stop loss or something like that to be thinking, you know what, I ought to be looking long around that level, right? And that's the amazing thing about these points. But if you look at the lines overall, right, you can see the number of trading opportunities you would have had around these lines. And I just want to highlight a little bit of a nuance here as well, right? Do you remember I mentioned about how I don't mind playing the first few bounces off the first line, but once the price has broken through, maybe she'll pull back and you can have that line negated, right? So what would happen is that once that line has been used and once you've seen price crisscrossing through it, what you would do is actually you'd remove that line, right? And you'd no longer consider it as that significant, right? We've seen later on how the price bounces off of it. You could put it back on later if you wanted to. You can, I mean, this is a decision you have to make, whether you want to keep it or whether you want to ditch it. But ordinarily what I do is once I've got my first few plays off of that line, I stop considering it as being very significant anymore, and I will remove that line from my chart. I don't think I need it anymore. If we're looking at this one, after that first resistance play, and actually, if you we did play this short on Euro USD, you'll find it in some of the very, very old webinars. But you would remove that line because you've seen the price crisscrossing through it. This one still looks quite significant, right? So we've seen when it pulled back and when she found resistance at that 35 area, it was with that line. We had other reasons to be looking short there as well. We had the hook and everything and the cluster on the left hand side. But that aside, the line was very, very significant. If we look at the lower level, what we had was an overthrow. So the price broke through, pulled back, found resistance, broke higher, right? And I would still consider this line to be significant, right? So if the price does end up making its way back to the 25 area, I would consider this area to be quite significant, and we ought to be looking for the long trader around there. You know, all you're looking to see is for a bullish hourly coming off of that line, and then you can use that hour in order to define your risk, or you'd wait for a bullish 4 hour and you'd use that 4 hour bar in order to define your risk, and you take your long trade looking for that little bit of a swing north, right? But you can see why those levels are significant, why I'm drawing those support resistance lines, why I'm drawing those walls, right? They work and they work fantastically well, and these levels, they tend to hold to the pin. That's the kind of to the pip. That's the amazing thing about them, right? So they tend to be very significant. So there's lines and there's lines. There's trend lines. We know how to play the trend lines, but there are trend walls, and these support resistance walls, they work really well. All you have to do is find a support level, find a resistance level, find that the price was hooking through these levels, you connect that line, and there's two things that you can be quite certain of, right? The first thing is that when the price reaches that level, you're going to get a very significant bounce. And the second thing, and I'm going to leave you to work out how you can play that, is that the price will reach that line, right? So when you've got that structure established, the price will reach that line, and you're going to be seeing a fairly significant fairly significant move around there. Guys, I'm going to have to stop again. We're going to have to pause for a couple of minutes, and maybe if you just take a few seconds to take this in, and then what we're going to do is we're going to look at another chart and draw these support resistance lines for something which is going to potentially give us a trade over the course of the next few weeks. So just bear with me, and I'll be back with you in a few ticks. Cheers, guys.